Most people believe that to win in the markets, you need to be right. They spend thousands of hours studying RSI levels, PE ratios, and macroeconomic forecasts, operating under the delusion that the financial world is a giant logical machine. A machine that rewards the correct answer. But they are wrong. The market isn't a math problem. It's a hostage situation. Every time you press buy, you aren't just participating in a trade. You are entering a theater of war, where the most rational investors are often the most dangerous, not to their enemies, but to themselves. Because they believe in a world that should exist, while the winners are busy betting on the world that actually does. In Yi Wu Yi Sen, Niccolò Machiavelli wrote a manual on power that was so honest. The world has spent 5 centuries trying to pretend it's evil. Today, we're going to apply that evil to your portfolio. If you've ever wondered why the good companies fail, and why the most ruthless players seem to hold all the cards, it's because you're playing by the rules of a game that ended a long time ago. This is the philosophy of finance. And today, we learn how to survive. We live in the era of performative virtue. We are told that we are entering the age of ethical capitalism. Every major bank has an ESG department. Every billionaire has a foundation. And every index fund promises that your money is doing good while it grows. This is the ought of finance. We ought to believe that markets reward innovation. We ought to believe that hard work equals wealth. But look at the gap. Since 2020, we have seen the greatest decoupling of value and reality in human history. We see companies with zero profit valued at billions, while the people producing the world's actual energy and food struggle to stay solvent. The traditional math says this shouldn't happen. The math says inflation should have behaved differently. The math says the middle class should be thriving. The conflict is simple. Your spreadsheets say the world is stable. Your gut tells you it's a house of cards. Why does the data fail to explain the chaos? It's because the people running the machine aren't mathematicians. They are princes. And they aren't trying to solve for X. They are solving for power. We've always been taught that saving is a virtue, that slow and steady wins the race. We are told to trust the system and invest for the long term. But what if I told you that in the current 2026 economic landscape or world governed by the Moore's law of debt saving is actually a form of slow-motion theft? What if the very act of being responsible is the precise mechanism the princes use to strip you of your sovereignty? In the next few minutes, we're going to explore the Machiavellian secret that the top 0.1% uses to stay ahead, why the moral investor is the ultimate bag holder, and how a 500-year-old book on Italian politics is the only true guide to the modern stock market. Stay with me. Because once you see the gears, you can never go back to being a passenger. Machiavelli famously wrote, "How we live is so different from how we ought to live, that he who studies what ought to be done rather than what is done will learn the way to his downfall." In finance, this is the distinction between market theory and market reality, the lion and the fox. Machiavelli argued that a successful prince must be both a lion and a fox. The lion can scare away wolves, but he cannot recognize traps. The fox recognizes the traps, but he cannot defend himself against wolves. Most retail investors are neither. They are the herd. They follow the lion, the institutional banks, into traps bubbles because they want to feel safe. Think of liquidity as a river. A rational investor looks at the water and says, "The water is flowing today, so it will flow tomorrow." But the Machiavellian fox looks upstream. He sees the prince's central banks building a dam. He doesn't wait for the water to stop. He sells his boat while everyone else is still admiring the sunset. The virtue of the short seller. This brings us to the most hated figure in finance, the short seller. To the public, the short seller is a monster. He is the man who bets on failure. But in a Machiavellian sense, the short seller is the only honest man in the room. If a company is a pious fraud, a business built on debt and lies, the short seller isn't destroying wealth. He is simply the fox pointing out the trap. The aha. Insight. The market is not a place where good triumphs over bad. The market is a feedback loop of fortuna, fortune, and virtuability. In 2026, wealth is no longer about what you own. It is about what you can defend. If your wealth is held in a system you do not control, you don't own it. You are simply renting it from the prince until he decides he needs it back. So what does a Machiavellian portfolio actually look like? Does it mean you have to be a criminal? No. Machiavelli wasn't a criminal. He was an analyst. The first mindset shift is financial realism. Stop looking at price and start looking at incentives. Ask yourself, if a policy makes the public poorer, but the state more powerful, will the state implement it? Machiavelli says yes, every single time. Stop being surprised when the system acts in its own self-interest. The second shift is anti-fragility. Prince does not put all his soldiers in one tower. If you are 100% long on a single currency or a single banking system, you are a subject, not a prince. True Machiavellian finance requires hard sovereignty assets like physical gold, decentralized protocols, and land things that do not require a permission slip to exist. Critics will say this is a dark way to look at the world. They will say that trust is the basis of the economy. And they are right. Trust is the basis of the economy, which is exactly why those who can manipulate trust hold all the power. You aren't being mean by protecting yourself. You're being virtuous to your future self and your family. As Machiavelli said, it is much safer to be feared than loved in finance. It is much safer to be independent than included. Here is the final revelation, the kicker that most people miss. Machiavelli didn't write The Prince for the kings. He wrote it for the people who wanted to become kings. He was showing that power isn't a birthright, it's a strategy. The same is true for your wealth. The current financial reset of 2026 isn't a disaster for everyone. For the rational herd, it is a tragedy. But for the Machiavellian investor, it is the greatest opportunity in a century. When the ought of the old world finally collapses, the eyes of the new world will be owned by those who weren't afraid. We started by asking why the most rational investors are the most dangerous. Now you know, they are predictable. And in a world of princes, the predictable are always the first to be conquered. So I leave you with this. Is money truly a tool for your freedom? Or is it just a more comfortable cage? Let me know your thoughts below. If you found value in this deep dive, subscribe. We don't give you tips, we give you vision.